Hello everyone, this is John from Baro Finance. Welcome back to our channel. We are with you on Wednesday, 5th of January. Alright, on this video we will cover US oil, dollar index and gold prices. And these instruments will be affected on FOMC meeting tonight. That's why we will just tell you what we can be expect from these instruments. First of all, if dollar index just rise quickly, that's expected one. And if you just hear first rate hike date in March, then we will see pressure on US oil and gold. All right, let's start with US oil prices. As you can see on the chart, on the last 7 days, almost like a 7 days, and it's getting to 10 days and tight channel. If you don't count on these two big candles, these are the 4 hours channel, it's just only 8 hours, and we see that just in a tight range, in a tight channel. It's not something usual for US oil market. As you can see here, it's always going up and down for a few days, but right now it's going up, and we may see this is just beginning to behave like a strong resistance, so a sharp decline in this commodity can be seen because the variant of Omicron, alright, it's not so deadly, but still it's making a lot of pressure on hospitals, over the hospitals. So that's the important part, I think. And actually, another bad thing for healthcare system, if the patients don't recover soon, but they don't die, they just have suffering, and it's just becoming more and more people just occupying the beds, and then the rest of the other things will just be chaotic. This is the case right now, and then this may affect the market in a negative way in the coming days, especially in Europe. We have seen really high levels of COVID yesterday, and for example, France has reported 270,000 new cases, almost 400 new deaths. That's the effect of lagging. So first the cases have risen, and they just went to 100,000, 150,000, 200,000, and now the new deaths are just rising. That's the nature of this pandemic. First, the new cases rising, active cases rising. With these active cases, some people cannot be treated effectively, and we lose some of those people, and new deaths rising. This is the nature of that one. When we see these high numbers, we may see some restrictions, and then those restrictions will keep the prices down. As I said, this week is critical for FOMC. Tonight on FOMC, if dollar index goes up with expectation of first rate hike in March, then it will just create another pressure on oil prices, and we may see a start of decline in this commodity. Please just watch that one. Alright, let's look at our next chart, which is dollar index.
You are ready to win with us. GAN Markets.
Alright, dollar index is just so cannot decide its way, because expectation of rate hike is just getting so much popularity, then something new is just happening. For example, for this one, as you can see, it has tested like a 95 level, and then from that level it's just rising fast. But at the same time, with the expectation of that one, but at the same time, the new cases and is affecting all the market, even the market of labor. We have seen the biggest resigns of the US history last month. New job openings, right now, the new job openings are record level. It was 11 million. Yes, some decrease, some decline, but still there are a lot of positions are open right now. So this is affecting overall the economy. This is affecting all the other things. On Monday, they have reported 1 million new cases in just one day. This is the record. So these kind of things are really making pressure on dollar index, but still people are just focusing on these FOMC, tonight's FOMC meeting, and the speeches after FOMC will just make a dollar index stronger or weaker, but many people are just thinking that it will be stronger if we just hear the first rate hike in March, because we are on January already. The Fed officials, if they just keep their promises, they said we will just warn the market before we just make the first rate hike. They said like this. So we may expect to hear that one if it's just planned in March, because the economy is already overheated, and then they will just do something to just cool down with these rate hike. It's not like a really big one, but still something. All right, let's look at gold prices, how they are trading these days. All right, gold prices are rising. All right, let me just show you something. Actually, this is what I see here, and then I just want to share with you. Yeah, from here to here. You see? All right, there is a slightly channel on upside from the mid of from the last days. I can say last days of December, because you know last year, it was 4% loss for gold investor if they didn't trade, if they just kept their golds in a physical or ETF, it doesn't matter, and they just kept it. So the price from the beginning of 2021 and then 2020, end of 2021, and the price has lost 4% value, and this year it is trying to cover that loss, and it is starting to go higher with some problems. Actually, some problems are just fueling these rise. The first one is Omicron, and the second one is Russia, Ukraine, and NATO issue. And these two things are just fueling the price of gold. It's affecting the market on the price of gold in a positive way, but the gold price is kind of something good for gold investors, but for overall economy, when there are risks, it goes up. So overall economy, it's not doing well. That means some things it's not healthy for investors. We will just see that, but still. Tonight's FOMC meeting is critical for gold as well. If we just hear a first rate hike and dollar index going up, then we will see a sharp decline on this commodity. The first place to test it's 1800 level, and from that level it can just rebound, or if it doesn't happen that one, even it can just go down to 1773 area. Thank you so much for watching us. We will together on more news. We will cover more charts with you this afternoon. Have a nice and profitable day.